Seeing all these people on WallStreetBets make and lose a lot of money on options got me thinking, can I do it consistently or am I just going to lose money? Obviously I'm not going to try that with real money, instead I'm going to make a demo account and set it to 1000 euros. I know that in the title it says $1000, but since this is a demo account, it doesn't really matter. And in the spirit of WallStreetBets, I've set myself a humble goal of 10xing my account to 10,000 euros. In this video I'll be trading for 7 trading days starting on December the 5th, but if you'd like to see me continue trading, let me know by liking or commenting. Now let's talk strategy. I want to start small and focus on one instrument only, and because I have already traded a bit of Nasdaq 100 futures, I've decided to only day trade and trade options on US Tech 100 futures CFD. This CFD is based on the Nasdaq 100 index futures, and CFD stands for contract for differences. I can trade this instrument with a leverage of 1 to 20 and its options with a leverage of 1 to 5. Oh, and on this platform I can unfortunately only buy options that get refreshed each month and have 1 month till expiration. I'll mostly be looking at the 2, 5 and 15 minute charts, but I'll also be looking at the 4-hour and the daily chart just to see the overall trend of the market. And I'll focus on the position of candles in relation to the 15 exponential moving average, which is this blue line, and the 180 simple moving average, which is this red line. Basically think of those two lines as support and resistance. And I'll mostly start trading when the market opens, unless I'm for some reason not home. On Monday I bought a call option with a striking price at $12,250 because the market dropped by a lot and the market usually overreacts, and I also set a stop loss. Then I bought some contracts of US Tech 100 futures, and because I thought the 180 simple moving average was a strong resistance, I set a take profit slightly below it and a stop loss slightly below the previous low. Then I bought more of the same calls and also set a stop loss slightly below the previous low and a take profit slightly below the 180 SMA line. I got stopped out of the futures contract, and then the market obviously started going back up. I was in profit on those calls and I had to decide between holding and taking a profit. Obviously my greed took over and I held, and consequently the positions got closed because of a stop loss. I was already down by around 34 euros, and later in the day the market looked like it was going to stop falling, so I decided to buy a call option with a striking price at $12,200. I also set a stop loss slightly below the previous low and a take profit below the 180 SMA line. Well, that call option got closed due to a stop loss, and on Monday altogether I lost around 65 euros. And around 45 minutes before the market closed on Monday I bought a call option with a striking price at $12,050 because the Nasdaq was down by around 2%, and my main reasoning was that when the market drops by around 2%, the next day is usually green. I didn't set a stop loss because I didn't want to get stopped out of the trade the next day when the market swings in the first couple of minutes after the market opened. On Tuesday after the market opened I was quite frustrated because I haven't yet made a single profitable trade, so I decided to just buy another call option, this time with a striking price at $12,100. A couple of minutes later I bought another one, and once those calls started losing value I even bought more. I was strongly convinced that the market was going to bounce off of the 4-hourly 180 simple moving average. Then a couple of painful hours later I even bought 2 more call options. The first one with a striking price at $11,900 and the second one at $11,850. Now what do you think happened the next day? Well, on Wednesday, around 2 hours and a half after the market opened, I was surprisingly down by more than 500 euros. I was basically revenge buying, pure emotional trading. Although I was still trying to convince myself that I bought those calls because we have already bounced off of that 180 simple moving average on the 4-hourly chart, and we were once again getting close to it. On Thursday, around 2 hours before the market closed, the Nasdaq was up by around 1.4% and the platform I was trading on was down. I couldn't log in and it really pissed me off because I just kept imagining I was trading with real money, and I honestly didn't know what I would have done if I had to lock in some profits or just close trades in general. Anyway, the last time I checked the market was up by around 1% and my account was down by around 160 euros. So we went from being down by around 500 euros to being down by just 160 euros. On Friday, 1 hour and a half before the market opened, I was already up by around 85 euros, although I was still down in realized loss. and the Nasdaq actually bounced off of that 180 SMA on the 4-hour chart, which gave me some confidence in my almost non-existent trading abilities. I thought that the next possible resistance is the 180 SMA on the daily chart, so I set a price alert slightly below the SMA. But I was still a bit worried because usually when the market is already up in the pre-market by around 1%, it falls into the market open or right after the market opens. So I eventually decided to close the call option with a striking price at $11,850, $11,900 and $12,100. Basically all options that were in the green. And I left 3 options open, that way I have finally taken some profits. And in realized gains I was up by around 9% or €95.55. After one red candle I thought the market was going to fall into the market open, so I opened a short position on the Nasdaq 100 futures. I thought the market was going to drop at least to the VWAP, so I set a take profit slightly above it and a stop loss just above the previous peak. Shortly after I entered that trade, the Nasdaq dropped like a rock and my short got closed for a nice profit of around €20. And right after that drop I bought some futures and I set a take profit slightly below the EMA and a stop loss below the previous low. The stop loss didn't trigger, but I still manually closed the trade because I thought the market was going to continue falling. So I realized a loss of around €14, which brought my realized gain up to €101.65. And after I closed that trade I opened another call option with a striking price at $12,100 because I quickly changed my mind and believed the market was going to go back up, and I decided to set a stop loss after the market opens because I didn't want to get stopped out in the first couple of minutes after the bell. However, when the market started going up, I rose my stop loss above my entry price and it eventually got triggered and made me around €16. Then I entered into 2 sales of a call option with a striking price at $12,100 because the market was flat for quite some time and then it slowly started falling towards the VWAP. I held them until 2 minutes after the bell for a nice profit. So in 5 trading days I was up by €158.83. But once again I was still down by quite a lot in unrealized loss. After a long weekend, it was finally Monday, and I wanted to buy a straddle for the Tuesday CPI report, which means buying one call and one put option with the same striking price close to the actual price of the asset. That way you profit if the market moves up or down by a certain amount. And if I wanted to buy a call and a put with a striking price at $11,700, the market would have to move by more than 5% for me to make a profit. Because I couldn't buy the same exact amount of puts and calls, I had to buy an additional call, and I unfortunately bought a bit more calls than puts, so my trade wasn't technically a straddle. Besides that, I bought one put option with a striking price at $11,450 because I thought the market was going to fall into the market close, but since the market looked like it was going to start rising, I set a stop loss. Well, it got closed due to a stop loss, and because on Tuesday the market was up around 1.5% even before the CPI report got released, I decided to sell my remaining call options from the start of this challenge for a nice profit. That way I only had my straddle open for the CPI report. In perfect hindsight, I should have held them through the CPI release as the market jumped up to 4% in the green. Anyway, I immediately sold my calls for a nice profit and set a stop loss on the put option because I expected the market to fall into the market open, which means my put would increase in value. But eventually I manually closed my put. At that point I was up by around 45% or €452.50, and I decided to end it there. But me being me, I just had to overtrade. So I bought a call with a striking price at $12,000 because we were close to the 180 SMA on the 5 minutes chart and I thought we were going to bounce back up. I set a stop loss and it unfortunately got triggered. And of course I had to buy one more call with the same striking price. I set a stop loss and lost another €30. Then I finally stopped. So we ended the challenge being up by €384.31. Even though I ended the challenge being up by around 38%, I don't really feel that good about it. I think most of my gains were a result of pure luck and not strategy. Therefore the way I was trading shouldn't be profitable on the long run. But if you guys would want me to make this into a series and continue uploading my progress, let me know by smashing smashing that like button. And you should definitely watch this video next. And as always, thanks for watching.